Good morning, everybody, and welcome to Non-Farm Friday. Let me repeat that: Non-Farm Friday. Going to be a big day. Going to be a big day. Let's open up with a dollar chart. Let's take a look at the Dow Jones, or even better, let's see if we can open up with the dollar index. And let me just show you exactly what's been going on here in the dollar index. Dollar index was ranging pretty nicely at the beginning of 2013, and as you can see, since the beginning of July 2014, US dollar, let's say, is blown through the roof. We're at the top of the trend line range, as you can see, around the 85.53 area. Dollar extremely strong in comparison to currency, and it's also pushing the price of gold down. And we'll talk a little bit about gold later. But the dollar is blowing through the roof. Don't forget, I'll repeat it again, Non-Farm Friday. This could stop the dollar in its tracks. Let me just read back some percentages of movement for you. The dollar moved broadly higher in the overnight trade last night. As we can see, broke the top of the range, 0.2% on average against its leading counterparts. Yesterday, price action appeared to be reflecting what we call pre-positioning ahead of the key event. Let me repeat, Non-Farm Friday. With the ECB rate decision behind us, traders were now really focused on this non-farm rate. It hasn't been any more important than what we're going to get today, and we're definitely what we call a risk on theme. And that's been the case since around 2012. Back here in 2012, February 2012, we have been very much risk on, dollar moving exceptionally higher. Investors are concerned that an imminent end of the QE3 asset purchases by the Fed later this month may cap this move and open the door for what we call risk aversion. So, we may turn from risk on to risk off. We all know about the decision made by Mr. Draghi, the ECB replacement for the US Central Bank. Very disappointing for me. I don't know about you guys, but it's been very hard to try to guess what the dollar's going to do. Talking of the non-farm decision, I'll go into it a little bit in detail, how to trade the Euro US, how to look at the dollar yen, and we'll take a look at gold. But expectations, if we just take a look at the calendar, USD, Euro USD exceptionally, when it broke the 127, then we're going to be moving down to the next level. I want to just take a look at a weekly on this. Bear with me a second. A weekly chart. The weekly chart's very interesting. I was trading on the euro dollar back from the beginning of 2012. Was very bullish. It did form a nice range, and it was bouncing between the two ranges in 2013. Caught it in July all the way to October that year, and when this little bit of noise, this is a bit of breakout here around the April 2014 area, and as we can see, price compressing in this area down to the test the trend line again in July 2014, and then we had that significant breakout to the downside, which I'm still trailing now. What I'm doing is I'm using daily chart and tracking down with manual stop, and just pulling my stop loss for the 3 days behind the market, and just trying to lock in a little bit of profit there. Euro USD, we can see that I think this non-farm is going to be very significant as to whether or not this currency pair will bounce. Let's talk about 5 scenarios for non-farm. If the non-farm is within expectations, just let me pull you that calendar again. if the non-farm is within expectations, where is my calendar? Okay. If the non-farm at 330 is within expectations, the first scenario will be 212 to 220, and it's within what people are expecting. The Euro USD may be likely to rise within its range. I'll revert back to the chart. So when we're talking about range, we're talking about, you know, daily range, weekly range, and probably if we just zoom in a little bit on time, you know, we may come back and we may test the 200 average being above 27, 127. So that's a within expectations prediction. Above expectations, 221 to 226 in number. We may see an unexpected high on the Euro USD. We may push back up to 27.50s, 27.40s. If it's well above expectations at 226, then, you know, we could be seeing, you know, 100 to 150 pip moves on Euro USD and Pound USD as well. On the cable, we could see a move back to new highs. On the other hand, if the data comes in bad and below expectations, 206 to 211, then we could see a better reading than forecast could result in the Euro USD dropping below one support level. When we say dropping below one support level, probably, you know, the nearest support level we have is around the 26, 21 area. You know, and if it breaks that level, then the nearest possible support will be around the 25.95 area. If it's well below expectations, below the 206 mark, now I think that the, you know, the numbers are going to come in around the 180s. Then, you know, we're going to see significant drops below even the 126 area, could be even pushing down to the 125.50s. So, you know, 150 pips down or 150 pips up, dependent upon what the data is going to be coming out of the US. How will this affect gold? Let's take a look at. Actually, we'll take a look at the dollar yen. Dollar yen just unbelievable. What I've done here is just looked at the key the Japanese jobless rates, the 2009 level of resistance and support, which was around the 100 mark. We all know that when yen got to 100, 101, that this was a massive area of you know, what we call ranging. The currency very much ranging here, and again very similar to the Euro USD, price compressing within the trend line range, and once it got within that range, we had significant breakouts around August this year, and the yen just really hasn't stopped, mainly due to the US dollar's strength. In terms of what may happen, very similar to the Euro USD. If you know, the expectations are above what we expect, then yen, you know, yen could push as high as 110, even, you know. So 108.87 at the moment. We could see the 109 mark definitely broken if it's above expectations. If it's below expectations, on the other hand, support is guaranteed to be tested at 108.45. If that support is to go, just switching out to a weekly, if that support is to go, then the next support down would be the 105.60 area, and if that 105.60 area is to go, then the next support down is the 101 area. So scenarios are bad for dollar, 200 to 300 pips down on dollar yen, good for the dollar, you know, testing the 110 area of resistance and pushing to 111, 112, making new highs there. That's about it for today. I'll just quickly cover gold. A few clients asking just to look at a gold chart. What I've done is I've overlaid the Dow Jones over the top of gold. Gold is going to be significantly affected by the non-farm. Also, dollar strength equals dollar weakness, and vice versa. So, you know, bearing in mind what I said about the expectations for the dollar, if the dollar gains strength, then gold will test that 1200 mark. If that 1200 mark is broken, then we could see gold pushing down to 1190 and even lower. So those people that are in longs, if the expectations are very bad, then we could see gold shave at least $20 to $30 an ounce from its price. If it's within expectations or above expectations, then gold probably going to test a high of the 1220 and even as high as 1230. So we have maybe $20 up if the numbers are good, and $20 to $30 down if the numbers are bad. I wish everybody good luck, and it's going to be a fantastic announcement. I'm very excited about this. Big data, and I wish everybody the greatest of success. Remember, don't get too tight with your stops or you'll get spiked out, and happy trading and have a wonderful weekend. Bye bye.